The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 20th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Right now it's just fine, 877-927-6648. If you can't dial in and you've got a question, well, let those fingers do the walking. You can always send me an email, steve@tfnn.com. Inside that subject heading, please put radio show question, of course, inside the Tigers Den. Well, any ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 217 points. Excuse me. Trading out at 24,447. S&P is down 24 points as well, both about 0.9% to the downside. The NDX 100 is one getting hammered, down 1.5% or 104 points. Russell's down 8.5%. That's 0.5% to the downside. Trend is off 87. New York Stock Exchange down about 0.6%. That's 72 bucks. Nasdaq Composite 1.25% to the downside. So you've got really Apple putting its charge into the S&P, into the Nasdaq Composite, most definitely into the NDX 100. Apple down 662. That's one of the questions that came in. So we'll go take a look at that question as we speak right now. And the question was, do I see any kind of a bottom inside of Apple? Well, let's go see what the charts are communicating to you and I. Let's first begin by taking a look at this chart right here for Apple and the important level. So you've got volume, absolute volume today. That's 43 million shares out here. You know how the Qs make bottoms with volume out here? I don't know if that's the exact same pattern here for Apple. So we're not going to spend a lot of time out there. But what we are going to be watching with regard to Apple, the price point to watch, don't know whether it will be today or not. Could be Monday. Could be not at all. It's 164.47. Now, Stevie chose 164.47 because that's the actual low during this, well, really the February, April, March timeframe. The actual low taking place April 2nd. Now, that's a swing point. There's 37 million shares there. If Apple closes below 168.94, you're at 166.24. If it closes below that level, we already know we've got the volume. Chances are that that swing point low will be tested. That's 164.47. What happens if Apple closes above 168.94 by day's end? Well, because you're coming into that area with volume, it'll be a rejection of that swing point. But because of with volume, price will likely go back and test that level being the top of that swing point. I don't have that written down here. I can just simply tell you it's 168.94. I've got it written down in my chart. I can see it, but I don't have a line that is designating that spot. The big problem, let's say that the day just ends piss poor. Can I say that? I just did. For Apple. And closes below 164.47. Well, that then sets up a visit to those February lows out here, because that would then give you a confirmed A to B equals CD to the downside. That would give you a 1-to-1 price projection of 159.91. 159.91, if I didn't say that. But I would say, nah, this would be more than a 1-to-1 A to B equals CD to the downside. More likely the 1.272 expansion, and that would be 154.73. If that were to occur and it were to find, Apple was to find a bottom, it would actually be setting up a Gartley buy pattern. Now, the reality is there's a Gartley buy pattern right at this 1-to-1 area. The 0.618 retracement on Apple is 162.95. The 0.786 is 157.36. So it is possible, with Apple coming out with earnings next week, it is very possible that what is unfolding here in the case of Apple is a Gartley buy pattern. The question was, do I see a bottom here? Well, if we go take a look at my other daily chart out here. Let's pull this over. One of the things that you and I are going to see is the very bottom panel on my screen is the price oscillator. And the price oscillator is the difference between two exponential moving averages. Many of you use a price oscillator or a version of it by using the MACD tool. Just make sure you're set to exponential and you would get the same value. That MACD line would actually be the same value as that price oscillator. The importance here is that this price oscillator is at or near the zero level. You'll see 0.15 on my screen. Now, typically, when the price oscillator gets to zero, what happens, it's very much like the, you know, the death cross, which is a kind of, you and I have got to come up with a different name for that, because the death cross, that's when the 50 crosses over the 200. When that occurs, it sounds to me like the prognostication that that's it. It's over. Death, right? It's final. Actually, it is sort of final, because when you see that happen, when you see that cross, and you go back and take a look at it, what you typically see, I can never guarantee anything, except that I'll do my best to give you my best. That I can guarantee you. But when you see those death crosses, it typically marks the end of the move. Yeah, not the beginning of the so-called bear market. You will see a sideways move. Well, if we take that back to where we're taking a look at what happens with the price oscillator when it gets to zero, if we take a look at the last time here right around March 28th, as that was occurring, what you saw was basically sideways movement for a couple of days out here. If we take a look at the last time the price oscillator crossed positive back on February 26th. So for 2, 4, 5 days, you saw price move sideways, test Stevie's red line, bounce off it, went to higher highs out here. So do I see a potential short-term bottom or here today, or whether it's today or it's Monday? The answer is yeah. I think all the selling is either out by now or getting out. And if we take a look at one more chart for Apple, where did I put that? This was the benefit of somebody sending an email about a half an hour before the show started, because I said, well, let me go try to answer that question. Now, I don't typically do this. I don't mean answering the question. I don't typically take a look at intraday time frame charts for individual equities. The futures contracts, absolutely, because price discovery is all over the place. But if we take a look at Apple, and you and I, we love to do those eights, baseball season. So we like that seventh inning stretch. And when you get to that seventh inning stretch, you typically get up and you do something else, right? Well, if you do that seventh inning stretch pattern on a 30-minute chart for Apple, looks like that was in. Looks like, unless we see a lower low in the next 16 minutes, that took place as we came on the air at 1 o'clock. So, yeah, the low may be in for Apple for the day, for the time being. This is Steve Rhodes with TFNN. You got to love singing in the key of G. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Back, folks. So the Dow's off 197, and a question that came inside the den was, where are we in the 30-minute chart for the NQ? So I'll show you that pattern as well. Let me erase it so that I can go ahead and draw things out here for you. So one of the things that you'll notice here inside of the NQ is it has several times been trying to form a bottom. Now, we can say that because price has basically been pushing lower. Not a 30-minute chart. It's hard to do, but it's been doing it. It's been pushing lower ever since yesterday afternoon at 12 noon. And we can see these diagonal black lines that automatically get drawn on my screen out here. That's telling us that it is really that the market is overstretched. That this is the way the tops and bottoms typically form. It's not the only pattern that is out here. Now, the requirement out here is you've got to see the cavalry arrive. It's 119. Full cavalry doesn't arrive until 1:30. So to call this current candle a bullish engulfing candle, that could be just jumping the gun, so to speak. But if we were to engulf the prior body's candle, well, that would be a bullish reversal signal. There's other bullish reversal signals as well, but then price would have to close above Stevie's red line at 66.99 to suggest that we're going to see an additional bounce or move higher. To where? Well, we'd go take a look at other time frame charts. At this chart here, I'd be saying 67.53 would be the price target. Now, that would be one heck of a bounce out there. Am I calling that right now? I can't. The chart hasn't called that just yet. The chart can only call that when it does very specific things out here. But this too, showing that it's trying to form a bottom, just as it did here at about 4 o'clock in the morning. And as it did yesterday coming into the close at 2:30, we saw it generate that same pattern. There was a little bit of a bounce. There was a bit of a bounce as it tried to form that bottom out there. Is this just going to be a little bit of a bounce too? I don't know the answer to that. But the question was, hey, where are we inside of the NQ? Now, the one thing that the NQ on a 30-minute basis, what it has done, that it's also formed I'm sorry, I didn't mean to do that out here. Let me grab this. It is also, in essence, formed a potential Gartley buy pattern. So the Gartley buy pattern looks like this. There's an A to B equals CD. That's what I've drawn up on my screen. Maybe it'll be easier if I give you a different screen. Let me do that. I always like it to be, most of us learn visually out here, or at least it certainly aids in that process. So here I've got just a dark chart, just a black chart. It becomes very easy to see the A to B equals CD pattern. And what you'll see, the A point out here is about 2:30 on April the 18th. The B point looks like around 2 o'clock in the afternoon. That was yesterday. Then a little bounce into 3:30 yesterday afternoon. That's my C point. And what you'll see is the one-to-one level. That was accomplished with a wide-ranging bar at 11 o'clock. This is using a 30-minute chart out there. You get a wide-ranging bar coming into a price target. It says one thing and one thing only, Vasily. It says stay away. Don't even think that that is where price is going to stop. It's going to go to the next stop in the station. Well, the next stop in the station here is the 1.272 level at 66.58. We didn't exactly hit 66.58. You and I, we use these as guidelines. You actually got down to a price point of 66.6660. Gee, sounds like the devil is out there. Now, here at this stage, we do have a bullish reversal signal, so you've got two patterns that may be forming. These patterns aren't going to confirm until price closes over Stevie's red line. If it doesn't confirm, what does that mean? That means you go down to the next train station, see if you can pick up those bullish passengers. They happen to be sitting at the price level of around 66.20 and some change out there. So that's what's going on a 30-minute basis, and taking a look at the NQ out there. The next question that came in, well, let me go to this one here. Tim sent in a question, so let's go to this one. And Tim says, I've been waiting for an entry point for MSM. So let's go take a look at MSM, and it's not Madison Square Gardens, because that would be MSG. But instead, this is MSC, Industrial Direct out here. Okay, so let's finish the question. It is broken down below its 50-day simple moving average. Do you have any suggestion for an entry price for this longer-term investment? Well, Tim, let's go take a look at MSM, which is really MSC, Industrial Direct. I guess MSC was already taken out here. So where we're at as we close the week out here, and that's what I'm going to focus on first for you, Tim. Here's what we know about ticker symbol MSM. Volume so far this week, 2.6 million shares. Got further to run. You're trading inside its swing point. That is February 26, 2.3 million shares. So you're trading below the top of that swing, 90.70. Right now we're trading out at 88.33. Odds favor, Tim, that price is going to go test that level. That level being the bottom swing point area, 84.84. You'd really like to see that area get tested on light volume before you attempt to step into this trade based on what it is we're looking at now. Now, you might say, well, but Steve-O, I'm looking at your chart. I see those weekly profiles. I know that's a bullish structured profile because the center line is closer to the bottom than it is to the top. So isn't this a good place to enter? And I would say, that's an excellent point, a really excellent point out there, because price is sitting right at the bottom of the box, which could be support. I would say no, you still want to sit back and wait. And the reason is because price is moving into that and is trading inside that swing point with volume. There's no rejection out there. Granted, you did have a nice move higher the week of November 27th. There was 3.2 million shares, so that's sort of a breakout area. But I think you need more, because if price takes out that swing point, that was the 84 level, the answer to your question, based upon these charts, would say, okay, what would it say? It would say if you close below 84.24, I think that was it, or 84.26 out here, you might take a ride on the reading and get all the way down into the August 2017 area. And to give you that price objective area, you're looking at somewhere between 71.45, 65.42. That's not our call just yet. But our call is let this sucker, MSM, which really is for MSC Industrial or something like that, just simply to confuse me, to mean then confuse you, I would simply wait. and be patient out there. So thanks so much for writing in. Best of luck with this trade when you do get into it. There was another question that came about, and I see even another question here on the NQs. I can answer that one quicker than I can the other one. This question says, question on the NQ, could we have just done a .382 retracement, now 500-point rally from 66.60 coming at us? I don't know. What is my guess? Well, if we get a completed Gartley buy pattern, let me come back here to the NQ. Here's the 30-minute chart. I'm going to go ahead and just simply show this on a little bit larger time frame. The A to B equals CD pattern is not going to be easily shown, but we know that that's in here. And if we take a look at retracements from the low back on April 4th to the high out here, here's where you're going to see where Maria identified, correctly so, the .382 retracement. And if that proves to be the bottom, then what Maria has identified is, could this turn into the ultimate of Gartley buy patterns? And where does that take price? The 1-to-1 takes you to 72.18. 72.18. Was that the price level you had? That's the one I would come up with. Maybe even 73.70. Steve Rhodes with TFNN. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So, to give you, I want to go answer this other question, which was longer term. What do I think the markets are doing? And that came in earlier. But just to kind of go down this process, because, we're all speculating about what the markets are going to do. Is this the end? Is it the beginning of the end? Where are we at in this cycle out here? Let's just carry over the thought process that Maria said, hey, is it possible that we just finished a 0.382 retracement? We can see that the potential for two different bottoming patterns on a shorter term chart that also tie right into that 0.382 retracement. There's any possibility that that sets up another run higher. We've got Microsoft, Google, Apple reporting earnings next week, I believe, and all those things are a possibility. How will we know? What's the early signals? That's really what you and I want to be able to identify, right? What's the early signals out here? And if we take a look at the 30-minute equity futures contracts, unlike going and looking at the 30-minute chart for Apple, which coincidentally, I don't know, had that seventh wave move, letter G out there. I'm more comfortable with regard to something that is trading nearly around the clock out here, just more price discovery versus something that's trading for 6.5 hours. Now, of course, we could go ahead and use pre-market, aftermarket data and so forth. But look, if we take a look at the last high that was made out here inside the ES Mini, that's a chart that's on our screen out here, you'll see it was the same pattern that formed here at the top that is now here at the bottom. What else do we know? Well, when it did form out here at the top, what did Stevie's red line do? Acted as resistance. Not all the way down, but all the way down before it made that next bottoming pattern about 2:30 yesterday, and then we had a little bit of a bounce. And so you can see the same pattern here at the top. Now we've got it at the bottom. And look, folks, if you would like to really understand this, you're not going to be able to, well, you might be able to. I try to do a good job, but if you really want to understand it, just go subscribe to Mastering Probability. I don't care if you just do it for 29 days and you chuck it after that. But, I mean, I do care, but I don't really, take advantage of it. I don't mean take advantage of me. I just mean take advantage of the opportunity. Turn your mirrors into windows and jump right through it. The reason is because as soon as you would sign up for Mastering Probability, you're going to get access to the workshop that I did just about a week ago, 10 days ago, something like that. And I'll take you step by step by step by step by step, because there is a fifth step, exactly what to do, how to do it, when to do it, with whatever instrument it is that you're trading out here. Now, if price were to close above Stevie's red line, this is the ES Mini, number right now is 26.76. It'll change during the time period that we see price bouncing up and down out here, but we can use that as the guideline. Any chance that the same topping pattern is now going to just work in reverse? It is a possibility. How would you really know? What's the real hurdle that the ES Mini would have to get over to say, that Maria, pretty smart. She's really on to something. Well, even if it doesn't work, she's really on to something. But if we take a look at if you want to answer that question, what does the ES Mini have to do to prove that that's the case out here? It has to close about 26.8475. Yesterday, during the show, I said, hey, I probably won't know till about 11 o'clock with regard to whether that was a significant top out there. I wasn't with you at 11. It wasn't exactly 11. I just need to see how the ES Mini, the NQ, the Dow, the YM, the Russell, how they all traded for about 20, 30, 40 minutes out there, just to confirm. And 26.8475 is his number. Inside the NQ, it would be 67.3250. That might be resistance. That might be where a bounce would end. Whether it's today or it's Monday, that's the number to key in on. So hopefully that didn't answer anybody's question, but it did give you at least Stevie's thoughts on what he would be looking at. So all we know right now, cavalry trying. There are some bulls that have shown up and are taking stabs. Have they proven themselves to you and I? The answer is no. So who's in control as we speak right now? It is still absolutely the sellers, regardless of because we don't know if they sent in the A team or the B team to try to secure that bottom. If we take a look at advanced decline oscillator readings out here, the interesting thing is that the New York Stock Exchange is just slightly below zero. Its reading is minus 1.59. Minus 1.59. So it could easily close above zero. It just takes a few changes in the net advancing issues out there in order to do that. If it closes below zero, well, if it closes below zero, then we have what Stevie likes to call a minus or a plus 150 failure. And if you take a look at it, you and I, several days ago, it might have been Tuesday, I can't recall which day it was, as the markets and New York Stock Exchange specifically was screaming higher and made a new all-time high in its advanced decline line. It had that advanced decline oscillator reading get above 150. 151, I believe, is the number. Of course, many of you, when I say 151, you think of what? You think of rum. I know my audience, and I don't blame you. Thinking of who is that rum? Like, it's been a long time since I've had that. It's been a long time since I've had any actual hard alcohol. Soft alcohol, hey, no problem there. But who makes that? Who made the 151 rum? Does anybody out there remember? Or is there more than more than a number 151 rum? In any event, you just take a look at the red lines out here, the red arrows on my chart. Those are other times where the advanced decline oscillating got up to plus 150 or more, and then turned down. Now, several of those turned down, and you saw a pretty decent move to the downside, and some were just a shallow. Is this just a shallow, Hal? Is this one like we've seen the last two other times out here? The last two other times, by the way, being the February 26th and the March 9th plus 150 failure pattern out there. Okay. Bacardi. Yeah, it was Bacardi. Thank you. Thank you, Bill. I knew somebody out there had to know about the 151 rum, right? Bacardi 151. Did you, Bill, did you ever have any one? I can tell you as a teen and a young lad, yeah, of course I had some. That's how I know about it. Way too much. Mr. Bill's had just a slight bit more than I do. Now, if the advanced decline oscillator reading finishes above zero, I can't call this a 150 failure pattern out here. And JB asked, do we have a confirmed change of trend yet out here? We're close. We're close. Here's what I can suggest to you, JB, that trading below those numbers I gave you in the equity futures contracts, that's not a good thing. That is not a bullish sign. That is a bearish sign out here. The more bearish sign would be just simply a bounce up to those levels. You talk about plus 150 failures, bounce up to those levels and start trading lower. That would be confirming your or mine or our change in trend signal out here. So do we have it across the board? We don't, because as Maria pointed out, all we've really had thus far, it's not looking great. But all we've really had thus far is a 0.382 retracement, at least inside the NQ. And the NQ arguably is the one that's just tanking today, you know, courtesy of Apple. But is that a buying opportunity inside of Apple? I don't know the answer to that question. Well, if I knew the answer, if I thought it was yes, I would look you straight in the eyes through this little camera here and tell you yes. I cannot do that. Not that I can't. I don't have any evidence to support that. If you're an aggressive trader, well, then you've got a couple of bottoming patterns. And I would say, if you're an aggressive trader, wait for price to close above Stevie's red line. That was like 66.96, somewhere around there. At least if you see that at day's end, yeah, maybe you take an option trade. See Rhodes, TFNN, right?
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Sorry about that. I was just reading a text message, just in case somebody had sent me a text. There was something else out there. So the Dow's up 156. So let me go back earlier. Late this morning, somebody had sent me a message. If I could just kind of give them an overview of my thoughts with regard to longer term, bigger picture, what is it that I'm seeing inside of the marketplace? And the specific question was with regard to the S&P 500. So let me take a stab at it, see if this makes sense to you. It makes sense to me. I think it makes sense to me, but see if this thing makes sense to you. Now, this is a weekly chart for the S&P 500, and I've taken us back into the March bottom out here, March of 2009. Really, if we take a look at the chart, we're starting at January of 2010. Now, you'll see that I have different months listed here. Like I've got January 2010, February 11, April 12, May of 13, January of 14, January of 15, November of 2015. How did that slip in there? February 17 and January 2018. Now, what that represents, here's one thing that you know and I know. Right? And if we tell more people, then everybody else will know it. And here's what we know. The Santa Claus rally, the one that begins when? Yeah, typically the middle of October. Okay, that's not what the people on the boob tube will tell you, but you and I know that that's the case. Let's not go there. Let's stay on track here, Steve-O. That the Santa Claus rally typically ends towards the end of January, sometime in January. Sometimes it's early January. It can extend beyond that. But here are when we've seen, going back to 2010, here's when we've seen, and it's a weekly chart out here, where we've seen the market make at least a short-term top since 2009. So that's what those dates represent. Now you're going to see some green horizontal lines on my chart out here. And those horizontal lines represent an annual period from the beginning, or really, in this case here, for January 2010, that represents the close in 2009, and then it just simply goes forward to the end of 2010. Then we pick up in 2011. Just so happens in 2011, the close of 2011, very close to the open of 2011. And so I've just had to go ahead and put a green dash line there so you could see that. And then you've got from May 2013, January 2014, and so on. Now, here's what I want you to notice. You've got the S&P Santa Claus rally sometime in January. Sometimes it's the first week. Sometimes it's the second or third. It makes a top, okay? And then the markets move lower. Now, when it's making a top in early January, it's making a bottom towards the end of January, February timeframe. That's why you and I always know to tell folks that are making a contribution to their old traditional style 401, any kind of 401k, any kind of retirement plan, to get that money in, not with their tax return, but to get that money in sometimes towards the end of January out there. That's the best time to get the most bang for the buck out there, because of when the bottoms come in. Here's what we also know. It's really important. It should be important to just simply note what the closing price is of the prior year and to watch how price responds from that point forward in your current calendar session. I'm going to give you an example. I'm going to take you back here, and this is to I'm going to show you what you'd like to see. That says, okay, this is one heck of a move that we should see for the year out here. If you take a look at 2012, this is where my crosshair, my cursor is. You can see that in essence the market just began moving higher, came back close to testing that area in the middle of February, end of February, the week of February 25th to be exact. Never got down there, doesn't matter, and then just simply took off from there, right? Beautiful indication that we're in for a good year. If you take a look at January in 2014, once price got above that level, which was in February 2017, kind of meandered for a bit, came back, tested it in April 14th, just simply took off, and it was a nice year as well. We can see how that line acted as a great level of support or resistance. In fact, the decline into the typical beginning of the Santa Claus rally, this is in 2013, all price did was come back, and this was October, the week of October 13th, 2014. All price did was come back and test that. You know, Larry likes to teach the opening price. I'm going to teach you the opening price with regard to what's the close of the prior year out here to give yourself a decent gauge as to what's going on inside of the S&P 500. If you look at 2017, the same kind of thing. It just kept moving higher, never came back, never looked back out here. Now, where are we at today? The actual opening price or closing price of 2017 was $26.76. Let me get the exact. Well, it's pretty close to the exact number. Right around 26.76. Where are we trading right now? 26.76. As soon as price cut through here, as it did in February, that was not a good signal out here. Now, I don't mean that I don't want you to interpret that as that means that it's bearish. That is not what I'm saying. It just was not a good signal from the standpoint that it's telling us that, and you don't need me to tell you this, but you know what? When you are visual and you can see it visually, and then you get to understand what's going on with regard to the market and day to day, what you can see here is you can see that what we're in basically is a consolidation. If price ever closes back above the highs that have been established in January, then we've got some real upside action. What we know is that we are in this consolidating pattern. We've seen this movie before. The last time we saw it, and I think this could just be a coincidence for those of you that believe in coincidences, was back in 2015. Between 2015 and 2016, November, so it was nearly a 2-year period, what the market did was something similar. Market moved high right out of the get-go, kept testing, finally broke through the close of 2014 in August of 2015. Now, the August timeframe of 2015, seasonally unfavorable. You know that. And then we just saw a consolidation roll out here. And that's what we have really going on as we speak right now. We've seen that before as well, because you can go back, in essence, into the 2010 timeframe, and you didn't see a real breakout until 2012. So if we are now, and by the way, if you take a look at, maybe I mentioned this, I probably did, the consolidation price area, the rectangular yellow box that you're looking at on my screen, It is the exact same consolidation size that we saw in 2015 that is underway right now. So what does that really mean? That means if we're in a consolidation, that this is really a time period for more of the intraday traders to really just make their living in trading this market both ways. And when you've got a market like we do that have got these average true range that are huge, 400 points, it's been larger than that, okay? So things are settling down just a bit. But basically, to answer the question, where are we at in the S&P 500, we have seen this rodeo before. We've seen this movie before. You know how you watch a movie over and over again? You don't think that the ending's going to be any different, do you? I don't. So we're in this nice wide consolidation pattern in the S&P 500. Is the bull market over? No, I don't think so. In fact, I'll tell you with certainty it is not over. We're just consolidating. Steve Rhodes with TFNN.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petrocurrencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. Going to be an interesting close for sure. As we speak right now, 1:54. We've got 2 minutes, so this is the 2-minute countdown. A quick peek back at the New York Stock Exchange and its advanced decline oscillator reading. You can see that's the bottom left panel. You'll see it reads out right now at a plus 4.51. So that is a market breadth bullish for the New York Stock Exchange. That's how. There is only one way you can read it. It means it just, in essence, market breadth came down to a level of support. I don't know what the day's session looks like at the end I wish I did. What we know is the market's trying to form a bottom. We're just waiting to see if pricing closes above Stevie's red line. If we look at market breadth for the S&P 500, because you and I just did this kind of overview of the S&P 500, because if you could use just that tool, where are we trading in relationship to the close of the prior year? It's going to help to get rid of the clouds, so to speak. It's going to not cloud your judgment as to what the S&P 500 is doing. That way, whatever BS I might be giving you, before Steve told you, that's how we like to use that acronym here, or before whatever might be, churning out on some type of tube out there, because, I mean, it's so hard to figure out how you can trust the stuff that people say. There are things that are said from a technical standpoint that I have no idea where they're pulling it out of. I know where they're not pulling it out of, okay? But, if we just look at market breadth, which is a really helpful tool in the S&P 500, right now we're at a precipice, so to speak. It's still bullish positive. Slight bias. 143 issues are trading above the top of the box, 140 below. Those bullish crossovers, they're important. I don't know what the end of the day looks like out here. I just don't. But at this stage, if this were the end of the day, I would be telling you to have one heck of a weekend. I'd tell you to be super safe out there, and I'd tell you that I'd see you on Monday. So that's what I'm going to tell you, except for the fact it's not the end of the day. It's the end of my show. And that means on deck, your favorite polar bear, my favorite polar bear, the entire world's favorite polar bear, even Coca-Cola's favorite polar bear. That's David White. He's up next. Tom O'Brien from 3 to 5. I'll be back with you on magical, magnificent Monday. Have a great weekend. Be safe out there. Take care.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartoloni for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now.